Hello traders, you're welcome back to the Forex Geek channel. In this video, we're just going to be talking about the order block crypto trading strategy. Okay, so we are going to be discussing trading cryptocurrency with the order block strategy, right? It's a powerful method that focuses on identifying where the largest market participants place their orders so you can align your trades with smart money flow. Now, in case if you were not familiar with the concept of order blocks, you need to first of all understand what order blocks are, right? Basically, an order block is a specific price zone where institutional traders or big market players have placed a large number of buy or sell orders. In crypto, these zones create strong price reactions. All right. Bullish order blocks form before a strong move upward. All right. That breaks market structure, while bearish order block forms before a sharp move downward that breaks market structure. So these zones act as magnets for price, drawing it back before continuing in the original direction. Now, to spot a bullish order block, you have to look for the last bearish candle before a strong bullish impulse that breaks structure. Now, looking at Bitcoin against the US dollar, we can see that we're currently in a bullish trend, right? Higher highs and higher lows, right? And all of that. Although it seems as if price, uh, changed character around here. Okay, but that's not our focus right now. So, considering the fact that we're having higher highs and higher lows, in order to get your bullish order block, you have to find the last bearish candle before an impulsive move. So we're going to be using this as a reference. This is the high, right? So when price breaks above this high, we are going to have a break of structure. Okay, that's what we call break of structure. When price breaks above the high, you create a new high, you have a break of structure, right? So now, what is the last bearish candle before that impulsive move? This is the last bearish candle before that impulsive move, right? So here we go. That's the last bearish candle before the impulsive move. Oh, I'm going to be using this just to make it to differentiate it. So I'm going to be using this. Okay, all right. So we can see that this is our bullish order block because this was the last bearish candle before the impulsive move that led to the break of structure, right? Okay, then for bearish order blocks, you have to find the last bullish impulse, right? The last bullish candle before a strong bearish impulsive move that led to a break of structure. The key is to focus on clean, decisive moves rather than choppy market action. Okay, higher time frames such as the 4-hour or the daily chart provide stronger order blocks, while lower time frames like the 5 minutes can refine your entries. All right, order blocks work best when combined with market structure analysis. So you need to always identify whether the market is trending or ranging before trading. In an uptrend, you want to focus on bullish order blocks. All right, in a downtrend, you focus on bearish order blocks. This alignment ensures that you are trading in the direction of the larger market flow. So once you have marked your order block, once you have marked it, you just wait for price to return to it. You look for confirmation such as a rejection wick, or maybe a break of structure in your favor, or maybe a shift in candle body momentum and all of that. Then you enter only after these confirmations appear. All right. You place your stop loss just beyond the order block. Let's say, for example, we had price come all the way down to this zone, and then perhaps we might just have a little bit of a range, and then you find a bullish candle, maybe with strong momentum. So if you enter your buy trade around here, you can just set your stop loss below the order block. Your stop loss is just going to be beyond, perhaps somewhere around here. Your stop loss can just be beyond the order block, and then your target is going to be at the next key level or liquidity zone. So you can just target around here for your take profit. So let's say you enter around here, stop loss below here, and your take profit is going to be somewhere around here. Okay, so that's going to be a good one. All right. Now, even the best order blocks can fail. So you have to limit your risk to a small percentage of your capital and stick to setups that meet all your rules. Okay, avoid over trading by waiting for clean setups and respecting your stop loss. Many traders fail because they force trades or ignore structure. Patience is actually critical with this strategy. You must be patient if you want to be successful with this strategy. So when you combine higher time frame order blocks, structure analysis, precise entry confirmation, and disciplined risk management, then you create a repeatable crypto trading strategy that can adapt to any market condition. All right. So now, if you are a scalper, you might be feeling that 4 hour time frame is too big for you, or maybe even if you are an intraday trader, yeah, the 4 hour time frame might be too big for you. So what I'm going to suggest is that you identify your order block on the 4 hour. Right after you identify those order blocks on the 4 hours, then you can actually go down to 15 minutes. If you go to the 15-minute chart, you can look for a corresponding order block that is around the 4 hour order block. Okay, you can look for a corresponding order block that is close to or around the 4 hour order block that you identified. Then you wait for price to come to that zone. Then when price gets to that zone, you look for your confirmation right there on the 15-minute chart. Okay, so once you get your confirmation on the 15-minute chart, then you are good to go. Right, you're good to go in that case. Then you just enter your trade, you set your stop loss accordingly, set your take profit accordingly. Make sure that you use proper risk management. It's very, very important. So that is the complete order block crypto trading strategy. Just mark your charts, refine your entries, and trade with structure. If you enjoyed this lesson, click the like button, subscribe to the channel, and turn on notifications so you never miss another strategy breakdown. In the meantime, thank you for watching, and I look forward to seeing you in the next video. Happy trading.